I think you watched tech and you watch financials. And the good news is financials are up 2.5%, had a little bit of a shakeout. They fell about 8% during that correction, but now they're rocking and rolling again. They're very important stocks. And then I think you watch tech because of how large they are in the index weighting. And the XLK is a hair away from yet more all-time highs, and not unjustified. Phenomenal earnings across the board, and we'll get more this week. So that's what I would be keeping an eye on. And look, you just had the biggest VIX spike ever in the absence of a 5% or higher pullback for the market. In other words, normally when you get a VIX spike to the extent that we saw last week, that's accompanied by more than 5 or even 10% of a drawdown in the market. You just didn't have it. So what does that tell you? That does not tell you we're at a peak or we're at complacency. It's the opposite. Everyone is still scared to death, and that's the kind of condition that you want to be in if you're going to bust through and have another leg higher to the bull market. So the sideshows are now fading away. Responsible adults who have been allocating to their accounts, responsible young people who have been adding to their retirement accounts are being rewarded for having had the fortitude to live through that volatility. And you've got earnings growth ahead of you. You've got the reopening. The vaccines are becoming less cartoonishly embarrassing in terms of distribution. We're actually getting needles into people's arms. And things are looking pretty okay going into the spring. And I think that's where we stand right now.
I'm glad you set it up that way. It really does go line by line, Steph, through what the current state of play is. And part of Tom Lee's thesis on why he says the correction ended on Friday is exactly the VIX and the way that the VIX is now reacting. Yes, it got a touch above 30. Now it's mid-20s. You know, he's always maintained
37.
that the VIX is the place to watch the most because, 37, sorry. Because if you have a VIX under 20 or low 20s, that's as much of a buy signal, Steph, as anything else. And also to Josh's point, that's why there's so much focus on these tech earnings, which are coming after the bell today. Amazon and Alphabet following what Apple and Facebook delivered last week. Those earnings reports remain critically important for the overall market because, as Josh said, the size of tech as it represents in the overall S&P.
So I know you're looking at the VIX, and I am too, but I'm also looking at the 10-year. And we talked last week very briefly when the short selling covering started happening in GameStop and AMC, et cetera. I was worried because it seemed to have a contagion effect where obviously we had a lot of people selling their winners to cover their shorts, but then also we had the 10-year fall below 1%. And that was the thing that got me a little concerned. So I am actually very relieved. The VIX has come down, sure, but that the 10-year now is at 109. Look, we had a 75% pullback. We had a 75% gain in the markets from the March lows. And so we were due for a pullback for sure. So it's healthy. And I'm looking at earnings. And so far, we've seen 80% beat rate. And we still have a long way to go. But stocks follow profits, and profits are going higher. And I think, sure, we can have some corrections along the way. But I think that if profits are going higher, that's a good sign.
Yeah. Degas, where are we? Do we have to worry about a correction that still has more pain, as Mike Wilson says, or can we take relief in Tom Lee's thought today that the correction, it came, it went, and now we're back to focusing on the vaccine and the virus trends are moving in the right direction, and we're thinking about the reopen, and you can even see it in the market today, which I'll get to some of those names after you give me your answer.
Yeah, so Scott, so ultimately what we see is that the markets will end the year higher. However, we still will have some choppy markets. So I would say that the first half of this year through June, we may look for additional pullback. And we're looking at, right now we're around 3,700 on the S&P. We could see that pull back to about 3,500. But we feel that by the end of the year, we're going to finish probably north of 4,000. So what we're seeing is that choppiness going forward. But this is still a good time to get into the market because we're definitely long-term investors.